dropped 3%. That compares to 2.5% growth for white-collar positions. Let's bring in the former McDonald's USA CEO, former Famous Dave's Barbecue CEO, and Fat Brands International Chairman Ed Rensi. Ed, Merry Christmas.
Good morning. Happy the day after Christmas.
We're a little hungover, right? The day after Christmas. Not necessarily from the eggnog, but, you know, just from the festivities in general. But it's worth it. Thanks for coming on. Blue-collar workers, they're in demand. Why is that?
Well, I tell you, I get to see construction business and the restaurant and hospitality business up close because there's a lot of capacity coming on board, and the shortage of carpenters, plumbers, electricians, concrete workers is pretty profound, and that shortage is starting to drive up costs. But I think it's all manageable. I think it speaks well for our economy. I think we've got too many college graduates and not enough trade school graduates in this country. And the other thing that's a little bit troubling to me, there's not as many women moving into the blue-collar worker field. There's a lot of opportunity there. Restaurant managers today, in the kind of restaurants I'm associated with, Fat Brands, for example, managers are starting somewhere around $65,000 a year, up to as much as $160,000 a year in some quick service restaurants in California. So it's a great opportunity for women to get into the service sector, get into the restaurant business, get into the blue-collar wage earner business. It's going to be good for the future.
So, Ed, you're saying there's issue finding talented or skilled workers to fill those positions? I mean, a restaurant manager making upwards of $100,000 a year, you can't find that person?
Well, the reality of it is, if you're going to be a restaurant manager, you have to start out generally as a minimum wage worker at the lower end skill sets. And you have to go through training for McDonald's, for example, is up to 2,000 years. And in Fat Brands, it's probably 1,000 hours a year right now in training to get to that point. So there's a big investment in those managers. They're running $3 and $4 million businesses without that master's degree in business administration. So there's a lot of training that goes on. And once they're trained, they're extremely valuable. Training a new manager is very expensive.
Do you think these higher wages, because there is a push for a minimum wage nationally of $15 an hour, how do you see that push affecting the bottom lines of so many of these businesses?
Well, I think the federal government ought to get out of the minimum wage business. That ought to be a state responsibility. People in New York City or Washington, D.C. have no idea what the minimum wage should be in Iowa. They're out of their minds. The idea that politicians know everything is proven erroneous every day. The minimum wage is going to go up naturally because when there's a shortage of workers, you've got to pay more. I know that there are restaurants right now in the business I'm in that are starting people at $13 and $14 an hour in communities where the minimum wage is $7. You pay what you have to pay to run your business. I know I was talking to a franchisee just this past weekend. He raised his prices almost 10 cents per item to cover the increased labor costs he's confronted with. And that's all good, ultimately.
Did customers complain about that increase in prices?
Well, it's kind of interesting. The price increase went up over Thanksgiving, Black Friday, and the Christmas holiday. People are in a spending mood, and more importantly, Trump's tax policy and his deregulation has made these businesses more efficient, and more people have more money in their pocket for disposable or discretionary expenses. I think what Trump did the last 2 years is terrific, and we ought to quit worrying about 2020. Let's start talking about what's good for this country, and these politicians ought to quit worrying about power and getting reelected and start thinking about what does this country need to succeed going forward. And it's good health care. It's veterans being taken care of. You know, New York City, for example, their housing administration is still fighting lead paint in apartments that are controlled by the city of New York. Let's spend money on that instead of some of the other nonsense they spend money on.
Yeah, I'm curious how healthy you think the U.S. economy is. A lot of folks say, and the numbers support that this is the best shape the economy's been in for decades. Unemployment, 3.7%. Wage growth, as we just discussed, is picking up. But what Wall Street is doing really is spooking a lot of people, and it's sparking fears of an economic slowdown next year. Do you think we have a slowdown in 2019? If so, how bad?
Look, I'm a Warren Buffett fan. You buy stocks and hold them. If you look at the long-term curve on Wall Street, if you will. It's constantly up. It's a sawtooth. It's up some days, down some days, up some years, down some years. Buy stock and hold it. The people that are traders are the ones that make this market goofy. The people that buy and hold and invest in companies over the long haul are the successful ones. So I don't pay much attention what Wall Street does on a day-to-day basis. I look at what Main Street does every day. Are they selling stuff? Are they employing people? Are they satisfying customers? Is there growth? So I traveled quite a bit this Christmas season. I was shocked at the amount of new construction I saw all over the place. It was joyous in my